So you're ready to take the leap into home ownership, but you're not really sure where to start. So I'm going to share with you my #1 tip that's going to set you up for success during the home buying process. And this tip applies to you whether you're a first-time home buyer or you already own a home and you're just looking to upgrade. First, you need to get very clear on your goals for buying a house. And I know that sounds kind of weird, like my goal is to buy the house. That's my goal. But there's other things that go along with that. How much can you afford monthly? What is the max monthly payment that you could afford? What price range does that put you in? What does your time frame look like for buying a house? How much do you have saved up for down payment and closing? All these little things that play into your end goal of getting into a house. These are definitely things that a mortgage lender can help you with. Now, I know that talking to a mortgage lender doesn't sound like the most exciting thing in the world, but it's definitely one of the most crucial pieces of the home buying process. A good mortgage lender can ask you all these questions and help you work through the answers to them. And with the answers to those questions, we can start kind of creating a plan to get you into a house. And it doesn't matter if you're looking to buy in a month or you're looking to buy in 6 months, a year, 2 years. We can still help you come up with a game plan. For example, let's say that you're looking to buy a $400,000 house, but you don't want to spend more than $1,000 a month. Well, something's got to give there. Either the price point needs to come down or the monthly payment budget needs to go up. Or if you have a very limited budget, then we know that maybe we're not looking at a conventional loan, maybe we're looking at FHA or down payment assistance programs. Or you're wanting to buy a $350,000 house and you're going to need $16,000. Well, now we've got pretty clear actionable goals on how much money you need to have saved up. So the next part in creating this customized plan for you is to review your current financials, looking at your credit, income, assets, your monthly debts. This part is really important because it helps us identify your current financial situation and help identify areas that might be keeping you from buying the house that you ultimately want. One thing we'll look at is your debt to income ratio, which measures how much of your income goes towards paying off monthly debts. If your debt to income is too high, it can make it really hard to qualify for a house, but we can take a look and see what is making your debt to income so high. So looking for things on your credit report that have a high monthly payment, but maybe a low balance. Paying off things with a low balance, but a really high monthly payment is going to help our debt to income the most because debt to income is measured by monthly debt, not your total cumulative debt. We'll also talk about down payment and closing costs. So that way you have a really clear picture of exactly how much it's going to cost to get into a new house. We can also talk about different programs and what those different requirements are. So in case you need to save up a little bit more money to get a better deal on a different loan program. Tying into your debt to income ratio, we'll also look at your income. There's a lot that goes into the income piece, whether you're self-employed, you're just straight up W-2 pay hourly or salary, or if you're a commission-based employee. We'll look at all that to make sure you don't have any issues qualifying and that your income is enough to qualify for the price range that you want. If it's not, we can come up with a game plan of either paying off some debts to lower your debt to income ratio, or maybe we need to adjust the price range. And of course, we'll also review credit, looking at your credit score and giving you some tips if we can make some adjustments there to get your credit score up to ultimately either qualify for a better loan program or to qualify for a better interest rate. And this is why I recommend starting the process 3 to 6 months before you actually want to buy a house, because with 3 to 6 months, generally we can fix most things. If you need to save up a bit more money, we can come up with a plan for how much you need to save every month to make sure you hit your goal. Or if your credit is a bit low and we know that you can get a better interest rate by getting it above 700 or 720, we can look and see if there's any small tweaks that you can make to your credit to get it up above that mark to make sure you're saving on the interest rate later on. Putting all this information together, we can come up with a customized plan specifically for you, your timeline, your goals, to make sure that you can get into the house that you ultimately want with as little stress as possible. And the best part of all this is it's free. Don't be afraid to reach out to a mortgage lender. We are definitely here to help. We do this every day, all day long. You're not a bother to anybody. So if you're a first-time home buyer, I know that there's a lot of people that are very nervous or apprehensive about reaching out to a mortgage lender. You feel like you're wasting their time. I promise you, you're not wasting their time. That is their job. Good mortgage lenders are not annoyed by this. We applaud this. We love when people come to us early so we can fix anything that could possibly be wrong and to make sure that you're in the best possible financial shape to buy a house. If you want to see a video on the top mistakes that I see first-time home buyers make all the time and how you can avoid them, check the link in the description. It's going to show you a video that's going to really help set you up for success.